Friends, this is Asim. So, as discussed and promised that I'll be starting a series of tutorials on um, technical analysis. So, today is the day when we are starting with candlesticks and going forward. Of course, it's going to be very basic so that I'm just going to make this assuming and take considering the people who maybe just be very freshers and looking to start their career or intro who just developed an interest in stock market. So from them, and then we'll move to advanced things as well. However, let me just tell you one thing very simply, that we need not really complicate the training if our objective is to make money. If objective is to just learn multiple things and not really the money, then yeah, it's a different story. But what I've seen is many people are just making loads of money just trading simple uh, the stock ideas and simple charting patterns or even charts, very simple stuff on the other side. Before we really start and get going, let me just wish you all happy Diwali, and I wish you a safe and prosperous new year coming ahead. All right, so let's start. So today's discussion is going to be on the basics of candlesticks. So what is candlesticks? What do they represent? What is the difference of a green candle and a red candle? What is a bullish candle and what is a bearish candle? How do they get formed? What is the logic and the psychology of bulls and bears behind the candle formation? Does candles really tells us more data points as compared to a line chart? We'll see some of the examples as well. In today's candle, we'll just get used to what is candle and what are different type of candles. However, in coming days, we'll talk about more things on candles, how we can trade candles, right? And can we really make money just trading candlesticks? And trust me, that is also the case. We definitely can make money, and it can replace your monthly income as well. So let's get going. So first of all, thank you so much for joining me and spending your time on this day, and let's get going. So now we are basically, so this is, let's say, candlesticks. So this is how we would have seen that how candlesticks look like, right? So candlesticks has two parts of a candle. One is called wick, or also known as shadow, and the other is called body. We'll just talk about what is a wick and what is a body, but just from a theoretical point of view, this candle looks like that we have a tail. Many people do call it a tail, do call it a shadow also, and they do call it as a wick as well. So multiple names, but body is called body only. So what is how's body formed and how's wick formed? So that is the next question. So wick, so let's, before we really get into that and not make it very theoretical, let's make it practical. So what happens, let me just start drawing certain things here. So what happens, let's say, so this is, let's say, the stock that it closed here yesterday. This was, let's say, 20 rupees or dollars or whatever, sorry. So this closed at 20, let's say, and next day when it opened on 22, for example. Let's say it, maybe just forget it, what is the percentage change and all. Let's say it opened on, let's say, 22. So it was closed here, so now it is opening here. It went on to 23, let's say, and then again it came down and it touched a day low of, let's say, it came down and touched a low of 21, and then it happens to close at around, let's say, 22.50 for that matter. So if you see this, the low, and here if you were to kind of depict that in this particular case, let's say this is your open price, which is 22. This is your low price, which is 21. this is your high price, which is 23, and this is your close price, which is 22 and half. See, now you can easily see that the highs, the body is formed by the difference between the open and the close price. However, the tails, whether on the lower side or the higher side of the wicks, are created by the highs and lows of the range. So this high and low is basically a range, and then you have this basically the body is the difference of open and close, and the remaining two sides then becomes tails. Hope you are clear. And similar way this also, let's say, but this is, we'll talk about it a little later. So here the open is when we are opening is becomes your body's formation, and then closing, so then your body is the difference between the two, right? Okay, so hope you have understood it, and if you're not, so what I would suggest you is that to just make yourself a simple example and then try and figure it out. So we'll also take some examples, maybe when we do those examples, and we'll take that example once we are able to understand the basics of the green and red and bullish and bearish candles. So we'll look at that as well. So similar way, you see this is a green candle and this is a red candle. So what is the difference between green and red candle? So we'll just talk about, let's say this, I'll show you this. This chart tells us a little bit more, as we learned already, that the difference between open and close is the body, and the difference of the then tails are formed because of the lows and highs. So the remaining range creates a tail. We'll go different kind of formations, how they get formed, but then let's hold on to that by now. So this green candle, what does green candle mean? Green candle is basically that this is a bullish candle, right? This is a bullish candle. Green meaning bullish. So why bullish? What happened? Your candle, irrespective of yesterday's price, we are not talking about yesterday price. Yesterday price can be here, yesterday price can be here as well. So we are just talking about today's action. What did price action do today? So if price action today has opened lower and then closed higher than the open price, then this is called a bullish candle. The color of the candle will be green, right? So the difference is basically that the candle has, the green candle is formed if the close price is higher than the open price. All right, pretty simple, that your price is rising. It can be 1%, it can be 0.5%, it can be 0.1%, or it can be 10%, right? On the other side, if you see the open price here on this side is basically, and then this is where the candle opened, let's say it is 100, and here it closed, let's say at 90. So if this is the case, then what happens that your price has come down today, price has fallen as compared to the opening price, the close price is lower. So if you see here, I've mentioned this, the close is lower than the open price. So that is how your red candle is formed. So I hope you're now clear with what is the difference between red candle and a green candle, right? So red candle, when your close price is lower than the open price, so formation will be red. If your close price is higher than the open price, your formation will be green, right? So if a buyer, if let's say buyer of a stock, like most of the retailers we do, is which candle is good for us? Is of course, green candle is good for us, because yesterday if we would have bought something for $100 or 100 rupees, today it has gone up to 102 or 103 or whatever, as against if something is fallen. So that's the fall means for a buyer is a loss, and a green means profit. So that probably basic we understand. So having said that, then the red candle is basically a bearish candle. So meaning price is falling here as compared to the green candle, price is rising. Hope this is clear to you, and if not, I would again suggest that please go and check this again, and maybe it's for very freshers. It may take some time to absorb it, because initially when I started, I also took some time to understand it, right? But it gives us 4 data points. What are the 4 data points? Is open, close, high, and low. So these are the 4, and many a times you would have heard this concept of OHLC as well. So that is how this concept has come from. So this gives us 4 data points, or the range of the day, trading range of the day. All right, so let's move on to the next. So what kind of different shapes these price behaviors generally make? So see, these all different shapes are candles only. It can be, what does this shows? We'll go into the psychology of the buyers and sellers, or bulls and bears, how that work. But just to kind of um, bring you on page that what is, how these candles are getting formed and what are these telling us. So let's say very quickly talk about this. So candle green here, so it opened here and did not really go any place down and close at the highest point of the day, right? So that is the reason the whole candle is basically very bullish. So throughout the day, there were buyers and buyers and buyers, and it just opened at a price and then kept on going up. So very strong bullish. On the opposite, this red candle is, which was very bearish. Because why? Because the price opened here and then kept on coming down throughout, and then it closed at the lowest point of the day. So you can easily say in the green one that your open price was the low price as well, and the close price was your higher price. So there is basically, if you see, the open and low are, low is equal to open and the high is equal to close. On the other side, the big red candle is wherein your open is equal to high and red is equal to your low. Sorry, close is your low. So very bearish candle. So we can simply say this is a very bearish candle. This is a very strong bullish candle, right? So this is the difference. How is, so any bull would love this kind of, so it shows that bulls are in control of this whole thing, and this candle shows that the bears are in control of this day, right? So now if we look at the next candle, so next candle is basically, if we see that price opened here, let me just remove these drawings so that we can create great. And now if we see here, so what happened in the third candle? So here the price opened at this level, kept on going up, and then profit booking happened and it closed here. So end of the day, if you see, the price did go up much, and then the profit booking came here. So it's definitely a very bullish candle, very good candle, but maybe during the day or end of the day there was a profit booking to this. So it's a strong candle, but not as strong as this candle, green candle. All right. So now the another thing is that there's a fourth candle that we are talking about now, this fourth one. So here what happened, let me just clean this. So what happened to the fourth candle? Similarly, if you see here, so price opened here, maybe during the day went gone down, but again buyers came back, they pushed the price much higher. So this is also very strong candle. This is very strong candle. If you were to rate, this is number 1, this is number 2, this is number 3 maybe in terms of bullishness. Similar way, these candles are basically other way around, wherein the red candle, this is where price opened here, tried to go up, but couldn't sustain there. Again selling came, and then sellers brought the price down. So here again sellers were in more control. However, buyers wanted to kind of try to throw their weight, but they couldn't really take it much higher from there. So this is about let's say this. So we are done with, let's say, these candles here. So this bunch of candles. So this is first is extremely bullish, extremely bearish, mildly, it is, I would say bullish, but not as much. This is more bullish than this one, and this is, if this is the strongest bearish, this is the second strongest bearish, and this is the third strongest bearish. So these again the similar kind of trend, wherein bulls and bears, they are trying to go up, but these are, green is bullish and this is bearish, but not in order. Let's say if you were to say this is number one, this is number two, this is number three, this is number four, maybe, right? Also accordingly, let's say for bearish. Now comes the fun side of it. Let's say the other candles which are very very different looking. So what are these candles? See here what happened. This is called a Dodgy. This is also Dodgy. This is also Dodgy. This is also Dodgy. This is a candle which, again, very funny candle, but this is also a candle, right? This is are two different and but very very important candles. So we'll talk about these candles in our next slides, because these candles need a little bit more elaboration on this, because they are very very important candles in our, and many a times they show a reversal as well, reversal signs as well. All right, so so we are now talking about four candles in one go, and these all four candles, if you see here, these formations are called Dodgy. So for theoretical purposes, you may just see what is traditional long-legged or dragonfly or gravestone. I don't go into that, but this, what we need to understand is what is their logic and why, how we can really understand them, and what's the psychology behind these candles. So psychology is a little bit of a complex. First, let's say understand the formation and what these candles tells us. But on the other side, we'll talk about the psychology in our little bit, maybe coming videos. Okay. So first of all, many places you would have seen that Dodgy is in itself is a trade signal, but those are just for theoretical purposes. Please do not do not take any trades on Dodgies. They are not tradable candles for that matter. But before really we go into that, let's see what happened here. So what happened, that the price opened here because there is no body. See, if all these you see that there is no body as such, right? We just see a line here, also line here, also line, because if you see here there was a body here in these, there was a body, and then these was a wick only. But if we here we see there is no body here, but there is tail on both the sides, right? So there's a long tail on either one or both the sides. So that's what, we don't have any range. So sorry, not zero range, this is zero body, basically, not zero range, sorry, this is typo, right? So no real body, and these all are because you see what's happening here. Let me raise them. So what's happening here, if you see that there is neither bull nor bears are in control, right? So what is it's opened here and closing here. So bears tried to pull it down, bulls pulled it up again. Yeah, at this point in time bear came, so it just closed and opened at the same level, right? So that is where indecisiveness. So that's the one of the reasons why I said that you can't really take a trade when the situation is of indecisiveness. What we need to be thinking about in our trading is that how we can trade uh, um, we need to be just piggybacking the stronger hands. So that's the only logic that works in, and that is what we need to see. We need not to be targets of the stock market, and trust me, we can't be. There are much bigger players, and there are bigger players than the bigger players. So this is what, no, this is a no real body, and the only thing that we can take is this indecisiveness about this. So let's, uh, but how do we trade? We'll just, there are patterns, but they are very important things to note, because many a times, if these candles, these kind of candles are formed at the top and the bottoms of a, swing or a trend, then, and the next candles definitely then, lets us know whether they are kind of, reversal patterns are getting developed, or they now the trend reversal is happening or not. So they just warns us before any trend reversal happens. So, and similar way, if you see here, let me just clean this up a bit. So if we look at here, these candles are slightly different, though they are also dodgies, but they are different than these two candles, which were in the body, or the open and close were in the center. But here, the open and close is at the higher or the lower side of the candle, range. So what's the difference here? So here it clearly shows that it opened here, gone down during the day, and then came up. So you see, many of the people will tell you that, okay, dodgy, so dodgy is this and dodgy is that. But no one, probably, or not many, would tell you that why and what's the logic behind this, or what is the psychology behind the formation of this candle. How do we really read these candles, for effective and confident trading? So the buyers who are strong here, buyers, yes, right? So if you see this formation at the bottom, is that formation across wherever it is made is good, or the same impact? No. The reason being, if it is, let's say, I'll tell you why. If this formation is becoming, let's say, they take three examples. Maybe one is this, we are talking about this formation. So this is running, let's say, there's a top here, and this formation is becoming here. So this formation at this level, after this swing, or because this is upswing, and here this formation is getting formed, is not the same as if there was a downswing and then there is this formation coming up, right? And the third scenario is wherein there was a kind of, and where there is sideways and this formation is coming up. So these three, I've given you all the three situations. So wherein this is your, let me color it differently. This is your up swing, this is your downswing, and this is your, let's say, range, right? In these three circumstances, so these three different things that we see in a stock market, so all three different places, particularly in range, it doesn't really have any importance. When it is getting formed at a higher level after the upswing or uptrend, and if it is coming there, if the next candle confirms the reversal, it becomes that at this level, though the buyers could take the price higher, but there was still sellers had come in at this point. So there may be a possibility that prices may retrace from these levels. On the other side, when this downtrend here, so this dragonfly will show us that there is a strong buying interest emerging at these levels, because even if the seller is trying to take this down further after it opened at this level, take this down further, but then again buyers came in and they pulled it. So it shows exhaustion of sellers, right? That is how we need to really understand this from our, rather than just a theoretical point of view, that okay, what it is and what is the name and what is not. So that is how you can trade it more effectively. Let's go to the real charts now, and there we'll try and find out some of the real life formations of these dodgies and marubazus and some other candles, and how they what happens once these candle formations happen. So that will give us an idea about the next few days, or the trend reversals, or what. We'll see these kind of formations happening every now and then. So you see here, this is one formation that we can easily see. at this one, it is after a downswing, right? This one, right? This one. So it's very often, this is made very often, and that is the reason, I said that, it is not really a very easy tradable or very strong tradable idea. It needs confirmation, right? So here is also, see, this is at the top, there is a here to some extent, yes, but yeah, on the other side it may not be in a very theoretical way. If someone has to say, it is not really. Okay, so this is about this. Let's look at some the bigger bullish and bigger red candles, which were kind of the strongest reds and strongest greens. See this. This is one such strong green formation, very bullish candle, right? And see how that after that in next few days the markets have really gone up, right? That clearly shows bullish sentiments in the market after whenever this is formed. See, this is another one. You can say another one bullish formation happened. So, and the larger the size and more powerful it is, right? So that is here, that is here. One is definitely, we can say there's a red, full red candle, right? So however, of course, this was kind of falling. Here also there's full red, these are full red. So in these few days, if you see, there's so many full red candles were getting formed, right? So that is where the markets were so wildly moving, so wildly. So, and let's look at some more if we can or want to. So this is anyways nifty, that what we are looking at is, see, this is where this March mid, see this one, a red, full red candle came, and this is and beyond this, let's look at this one. See, this is this formation. This is near about Dodgy formation, or in other words, also if there's another candle called, let's say, spinning top or spinning bottom, right? But that's a pattern that we talk about, right? Wherein the body in the center is not very theoretically dodgy per se, but it's a very negligible body as compared to the whole range of the candles. So I hope you understand the range. Range is basically the difference between difference between the high and the low price during the day. So we have seen some of these, candles, how they are, becoming. So we see these candles every now and then. And on the other side, if you see how they impact, let's say this green candle came and then it basically, for the next few days, you can see that it really created a, though of course in between there were corrections, but see the overall momentum gone high. See, this down candle came, but for next few days the down momentum came, right? And then let's say now, so if you see that whenever this kind of candle formation happens, so we are nearing some kind of top or the swing high, and then we go for a little bit of a retracement or whatever retracement. Let's look at some of the major highs and lows. And another thing to note here is these candles can form on any time frame, whether it is 5 minutes or 15 minutes or 1 hour, right? It's just easy to see that, okay, this is just nothing but, let's say it is 1 hour, so nothing but that what is the open, high, low, close of that 1 hour time frame. If it is a month, let's say, then it is basically that what is that open, low, high, close during that month. So if you see, let's look at the recent times. See, when this we are at a monthly chart now. See this one, and you will see that some of these candles do really give very strong signals or maybe caution to us that maybe when it is getting formed, so it may be some exhaustion happening here. See, this was market was rallying up. See, before the rally also there was a big See this, if you see here, this red candle came at the swing low, and then green candle came, and that set the tone for next, this thing. Here also, if you see, this came after a small swing of 4 months, and then he set the tone. Let's say red candle came, then again, and then so big red candle again. So this is how we can see that how these candles, some of these very important for those dodgies and the bullish and bearish. So wherever there's a bullish, Marubazu, this is called Marubazu. So this candle comes, it sets a tone for the strength, and wherever this comes, it sets a tone for the bearishness, and wherever, let's say, this comes, your dodgy or spinning top comes, it sets a tone that it may be exhaustion or a reversal signals. All right, so hope that is kind of now you can easily relate to what is how candles looks like, and are they difficult to identify. So what I would suggest is that you identify at least 20 plus at least maybe 20 or 25 such candles, so that your eye and you can easily, you don't have to look for them, and you can easily find out where are those candles. So this is, let's say, about this, and let's go back to our PowerPoint again. So this PowerPoint is now, let's say, let me put it to slideshow. So this is what we discussed. So here some comments I had made is no trade confirmation is must, as I told you that next candle, whether it is a trend reversal is going to happen or not. So we'll get to know about from the next. So I'll share in the coming videos some of the chart patterns on the candlesticks that gets formed using spinning top and bottoms, and the dodgies for that matter. It shows reversals, but not necessarily until unless confirmation is not done. So during range bound, these candles are not really of great use. So most useful in your swing, uptrend or upswing, or a downtrend or a downswing. All right, so let's go to the next ones. We will talk about these four new candles now, and which are similar to your dragonfly and gravestone dojis, except for the fact that they have a small body. But on the other side, if you look at it, the psychology behind the formation is almost the same. So here, this let's say if we talk about this particular candle, this candle, from the shape of it itself, you can easily make out the name, the hanging man, or a hammer, or an inverted hammer, right? So this is a kind of, this is a bar of a hammer, and this is a kind of, hammer itself. So this similar way. So how do we read it? So is basically that the opening, so let me draw here so that we can relate. So it opened here, came down, so it came down here, and then it closed higher than where it opened. So it clearly shows that the buyers were more stronger than the sellers. So the buyers were in control. So price has gone up. So this is definitely a bullish thing in itself, but it cannot be interpreted by itself. It has to be it is always to be seen in a context of the trend or a swing, because all these candlesticks are very, very important given a swing or a candle, because they are generally very, very, very good for doing swing trades and so on. So here in the second one, though it is also an hammer, but here what happens, see, it opened here, gone down, and then came up but closed lower than this price. No, so not that bullish as compared to this one. This is more bullish and this is less bullish, right? So this is what let's say So, and these two, let's say if we were to talk about, this is, let's say it opened here, gone high, and then closed here. So this is basically that it was trying to during the day price tried to go up, but then sellers pushed the price down and it closed. However, it could not really close below the open price. That's the reason it's a green candle here. Here in this fourth candle, what happened? The price opened here, tried to go up, and it did not sustain, and selling pressure came down, and the price closed below the open price itself. So it's basically further bearish candle, right? So out of these, we can say this is more stronger, this is more bearish, this is less bearish, this is less bullish, right? But as again, they don't really say anything without a context of a swing or a trade. So some of the comments that I've made here is, again, the confirmation is must, as we discussed in our this candle here. So next candle is basically that confirm whether the confirmation is there or not, and that we'll basically understand more when we go to the chart patterns, because some of those chart patterns then you can easily understand what I'm saying. So here no trade, confirmation is must. So show fading momentum. So that's very critical. How do we read it? So it shows us that be cautious, that it may be if it is an uptrend going on, and here there's a, let's say, hammer formation happened, irrespective of any color. Let's say if this happens, then it may be that yes, now momentum is fading. Why it is fading? Because during the day price has tried to come down so much, right? So there's of course some strong selling is coming at this level, right? And then similarly, let's say if it is coming down, price is coming here, sorry, here, and then here there's a hammer comes. So that means the selling pressure is now absorbed, and maybe this is a good there a possibility that momentum is fading, however, right? So it can be this also, it can be this also, a combination as well. So this is how we read it. So range bound, no, not that effective. So we ignore these things. As I said, it's more important in the downtrend or uptrend. All right. So we'll look at some of the, these, uh, you know, uh, formations on the chart as well, but along with another one, right? So this we have already spoken about, though it's a kind of very Marubazu. Sorry, my pronunciation for this is always not to the best. So again, as I said, green and red is nothing but whether the open, it's a relation of open and close price. So this is bearish, red is a bearish candle, and green is a bullish candle. So who's in charge is basically bulls are in charge, and here bears are in charge, right? So I'm just writing these with my fingers, so please don't excuse me for my handwriting here, right? So we have already discussed about it, so let's not spend more time on it. So that's it. And before we really close today's session, because I don't want to kind of jump in with too many things in one go, maybe I can cover the chart patterns, but I want to cover them very good, so that you can easily absorb it and understand it. So my suggestion would be that at least make your stock list, list down your stocks that you want to kind of look at, and then try and figure out some of these formations, whether it is Marubozu or hammers or inverted hammers or dodgies or bullish candles, and how prices have behaved after that. So that will give you a strong signal of what to do. So in next coming video was, what we'll do is we will basically address some of these points, and that is probably the end objective of anything that we want to do in this stock market. Stock market is very simple for that matter. We just need to decide four things, and that is very simple. What is buyable and what to buy, basically, right? Out of 600 different stocks, which stock to buy. Then second comes is timing, when to buy. So there are three different things that what we need to look at in that, and we are going to talk about that is when is timing important, because timing is has different if you are in intraday or if you are in long term, whether it is really important or not. When is, let's say, stock selection? This is basically stock selection, right? When is this important? When is timing important, right? When is your most important is your profit booking, when to exit or when to take the stop loss. So your, if you know when you are going to get exit, we when you would book your loss and you're not going to let it grow out of proportion, that is where you need to exit. So we'll work out in this fashion so that all the things that what we learn, we get the answers to these four questions, right? That is what will be our endeavor to our tutorials going forward. All right, and most of these things, and then we are going to basically cover some of these chart patterns. Uh, Basically, not chart pattern, these are candlestick patterns basically. So we'll cover this 12 or maybe more even chart patterns in coming days. So just keep on going, just be with me, and so I'm sure you don't have to really, after learning these things, and trust me, just up to this phase of chart candlestick patterns, if you have understood them to the best of it, and if you're just applying these only chart patterns, so trust me, you don't have to watch TV, you don't have to take tips, you don't have to do anything, you'll be good on your own. And that's it. So you can just start doing your trading without depending on anyone else. So if you like the content, if you think this is some value, and if you want to kind of spread a word about it and thank you about it, so just share it with your friends who are interested in losing money maybe. So if you want to kind of start earning and stop losing, so that is basically what can be a good starting point for you. Thank you so much for your time, and it was, I guess, good half an hour well spent. It is probably investment, not really spending itself. And happy investing. Bye.